Hello, Smart Money Tree podcast listeners. Welcome to this week's show. My name is Kirk Chisholm, and I'll be your host. So today I'm joined with Rishi Khanna. How you doing today, Rishi?
I'm well, thanks. How are you?
Doing well, doing well. So Rishi, why don't you tell us a bit about your background as we get started here?
Yeah, so by background, born and raised in Rochester, New York. I've been an entrepreneur most of my career. So did my first startup in the 90s, started my second company in '07, and then took over as CEO of Stocktwits in 2020. So spent a lot of my career in the world of alternatives and portfolio management tools and stuff for the alternative industry, hedge funds and their LPs and the like. I've been in New York City for almost 24 years now.
Nice. So tell me about StockTwits. I mean, I don't particularly use it because it's not really kind of the theme of what I go for, but I've heard great things about it. So what was kind of the reason for creating it, and what's kind of the reason that people use it?
Yeah, so Stocktwits has been around for a while. So it was founded back in '08, '09 by a couple of founders, Howard Lindsay being one of them. It's a place where we gather the community, the investing and trading community. And I think, having a verticalized community that's focused on one thing and where we can, provide the tools, I think that's what was that first special sauce. It is very much in the style of Twitter, right? So short form, conversational, back and forth between the community members. And we invented the cash tag, and so all the conversations can be organized, around the tickers and symbols. And so I think it's that place where you can find a more focused conversation. Depending on what kind of investor you are, what kind of trader you are, like style matters, right? We've been fortunate just to kind of continue to grow organically and have a really highly engaged community that talks about is able to talk about whatever it is in the markets. Today it's Bitcoin.
Yeah, I mean, you're involved in the tech community, obviously. So, kind of, what are you seeing now? I mean, a lot's changed in the last few years, but in
Yeah.
some ways it hasn't. So, what are you seeing kind of in the inside track in the tech community right now?
Yeah, I think obviously the big change with the regime change, right, around interest rates and the end of free money, so to say, is you are seeing a lot more people talking about kind of fundamentals, business fundamentals, everything from unit economics and gross margin to understanding a path to true, profitability and building a real solid business. Whereas, I feel like for a long time we were in a place where companies were able to skirt past that for some unforeseeable duration and future. Now that money isn't free anymore, yeah, you got to figure out that path to profitability and the fundamentals. And that is a conversation that has become much more common in the last year to year and a half, call it.
So, you mentioned Bitcoin and cryptocurrency. Obviously that market has changed a lot. I'm curious in your thoughts. I always ask people that kind of have some sense of the market.
Yeah.
People who don't, it's kind of a non-starter. But people really understand. I get a very strong theme with that. So, what are your thoughts on it?
So, I think I'm of two thoughts there primarily. One is it's here to stay, right? I think the asset class as a whole is not going anywhere, and I think we've seen that resilience over the, what is it, 14-year life now since Bitcoin itself was first introduced. Um, and so, trying to dismiss it and say, hey, it's not a real thing, it's not something that's going to be around. I don't think that's, you don't have to be interested in investing in it, but it's not, like really tenable to say, oh, this is like, not going to be here, because I think we've seen that. But on the other hand, I don't think we've seen the utility yet that has been promised from it. Whether it's, and I don't mean specifically Bitcoin, I just mean crypto and the blockchain as a whole, right? We've been given a lot of theories and promises around how it's going to, fix financial systems and do this and do that. I think we have very few real use cases yet that, are material and things that are specific to blockchain. Sure, you can do things on the blockchain, but why is it so much better on the blockchain versus just using a database and good old fashioned like coding and stuff, right? So I think where it's here to stay, but the counter to that is like we do need to see more value out of it, like in actual real utility, beyond price action and just moving money around, right? I mean, I think its utility over the last 4 or 5 years has been about price action.
Yeah, I mean, you could argue that moving money around is one of the main purposes of it. I mean, it doesn't cost money to move money from one part of the globe to the other, and you can do it instantaneously. It doesn't take you a week, right? I mean, that's one of the main uses, right?
Absolutely, and so that's probably the, and I would assume or suggest that is probably the biggest use case today for these things. But you don't need like 10,000 different coins and tokens for that, right? Like you can accomplish that with Bitcoin. And so okay, if that's it, okay, fine, right? But I think we've been promised a lot more.
Yeah, I think I mean, the thing that I found most interesting, and not the looking at it as a casino aspect, but the part I found interesting is, if you look at the internet in the early 90s, people were saying the same thing about the internet. I just don't understand how it's just a bunch of gamers. Like, no one else is using it. I can't see
Yeah.
how this has any application. And then, of course, now we can't do without the internet, right? And I kind of looked at blockchain as the next internet, like the capabilities that could be there could apply to anything, and the security and all that, right? I mean, we're still early, is how I see it. I mean, you see it another way, or
No, so I mean, I can see that, right? Like the internet had these exact same things, but I guess the question is, how long? I mean, because like it's not like these promises were started to be made last year or 2 years ago or 3 years ago, right? This has been going on for over a decade now. So at some point, you have to ask the question, well, why not yet? Like, what's happening? What's holding it back? Is it, there's people that blame regulations and governments and stuff, but I don't know. I think like if there was a great enough use case, it would get through that, right? And it would fight through that. I think the other, you look at AI in the last 6 to 9 months and the rise of AI as a counter to that, where everyday people are seeing the benefits of generative AI already, right away. Now that's been the work there has been going on for a long time, but we now see it and it's become a part of our everyday conversation, and we're seeing the value. There's real value right away. So how long do we wait for blockchain to deliver real value? Like when does that happen? Is it do we wait another 20 years, or should it come around by now?
yeah. I mean, I would, I guess I would kind of argue that, I mean, if you look at the internet, when was the internet invented? Right?
93.
No, actually, it
I mean,
was.
like, when like true human interfacing of it, right?
Yeah, it was conceived in the 60s, and it was
Sure.
and it was applied in the late 60s, early 70s, and it really got out, like you said, in the 90s. Can't
Yeah.
remember if it was in the 80s at all, but
Mhm.
correct. Yeah, it took a while to get from that stage to where it is now, which, um, I'm not an advocate for or against, the coins or anything like that, but I think the blockchain technology solves huge problems that we're not able to solve any other way. One of which being is security, right? Like right now we have billions, if not trillions, stolen every year from financial institutions, from cyber hackers and all this, because of, they're able to steal it, right? But if you had a way to make things more secure, then that wouldn't happen as much, or if at all, right?
I guess I would. I mean, like, there's a lot stolen off of blockchains every year, as a percentage, way more than the traditional finance system, right? And the thing about the unfortunate thing, I can have, my money stolen from a bank. I have recourse. I have legal recourse. I can go to the banks. I can do something about it. Go to the credit card company, right? The issuer and whatnot. If I get something stolen off the blockchain, it is very hard for me to have any recourse whatsoever, and it disappears. So I don't know that security is like really a great use case right now that crypto has.
Yeah, I think like everything else, like it's still in its infancy, but theoretically, if you had an infrastructure around it, that you could do that, right? Because any sort of system right now, right? You have, I think of it as like, you think of like cars, right? If
Yeah.
you're speeding, the police have radar guns. And then when I was a kid, they came out with radar detectors.
Yeah.
And then the
Um,
police had radar detectors, right? And then they had laser and they had all this other stuff. And it's just this battle back and forth. And you can't, you have these firms that make, ungodly amounts of money protecting companies from hacking and all that. And
yeah.
yet feel like that's just, you just have this battle going back and forth. No one's solving the problem. I mean, theoretically, blockchain should solve that problem. Now, it hasn't necessarily, like you said. I mean, it still gets stolen. People don't have their security right and all that. But there's a whole bunch of challenges with it. I agree. Like it's still in its infancy. I don't think we're quite there yet with people applying it. But I find it hard to imagine that the things like the like the stock exchanges, why wouldn't they
Yeah.
go to blockchain? Like, why do you have T+3, T+2, T+1 for trades? Why not have T+0? Now, there's obviously challenges in there if you did that, but hypothetically you could, and it would reduce the friction on a lot of levels. So that's the part that I find interesting, that, like you said, no one's applying it, but I feel like that's kind of a longer process to apply. I don't think that's an overnight thing.
Yeah, and they've been working. I mean, DTC has been working on that for years, right? I don't, but like again, I don't think blockchain is a special solution to it. Like you could have done that with the database as well. There are reasons for T+1, 2, and 3 that
Right.
are kind of separate from the underlying tech, right? I wonder, like, kind of the analogous is, do we want 24/7 trading in stocks?
Hopefully not.
I mean, like, I don't think we want that, right? Do we? Like, we have that in crypto. We've seen kind of what that, especially if you think about like from a managing, wealth and money perspective, like, you got to be able to like say, okay, hey, got to take a break.
True, true. Yeah, and I think part of that is some companies have done it, and people just don't care as much. I mean, there are some. I mean, the futures markets are pretty much open
Yeah.
24/6, right?
Yeah.
So, or something like that. So,
Yeah.
but you mentioned AI, so I want to touch on that a little bit, because that's a new fad, it's a new shiny object everybody likes talking about, and I think it definitely has broader implications. But probably like crypto, it's got some immediate applications, but I'm not sure it'll
Yeah.
be widely adopted right away for so many reasons, not necessarily because of the tech. Where do you think that's going? What do you think some of the challenges are?
I mean, I think the biggest, let's start at the challenges first, because I think that is the clearest, and the biggest challenge there to me is, like, I use the word, it's trust, right? I mean, I was just actually having this conversation last night, sharing the concept of deep fakes, like, which, weirdly enough, not everyone actually knows what a deep fake is, which I thought at this point, maybe I'm too much in my tech bubble, right? But um, how do you trust anything, content anymore? And what's real and what's not. So I mean, I think trust is the biggest challenge that is brought upon us by AI. In terms of, I think, its value, like, we're already seeing it. We are absolutely already experiencing it. We may not know it, but the amount of content now that is generated, or at least assisted by AI, I think is a great way to put it, is pretty vast. So I think that media content world is being directly impacted already today. I think you're seeing now, the ability to ask questions in a human way, which was made, very popular now by ChatGPT, is a real use case. Like, I'm able to, just ask questions and get answers in a human readable form back to me, versus, me having to click on like 10 different links to go, find something. Now, can I trust that answer? That's the big question. Do I believe it? And we've probably all read the stories where, hey, you ask ChatGPT something and it like completely makes stuff up and it's false, and it's incorrect. And so that's the big challenge. But in terms of, I think, its application, where we already don't even know how much of it we're experiencing, I think, in the world of content. I think where in the world of, finance and investing, I do think it's more about assist, right? I mean, when you think about investing, I think about it as it's a game of information and information asymmetry. How do you find alpha? How do you find an edge? You either have a thesis, a process, or you have an information edge. And in this world of unlimited data, unlimited information, essentially, how do you synthesize it? How do you synthesize it in a way that's consistent with your thesis, with your strategy, with your style, with whatever it might be? So I think that like assisted investing or assisted information processing is a very real near-term use case. This year kind of thing. I mean, I get pitched a lot of different companies and startups that want to work with us, to provide us, tools for investors and things like that. So I think that's upon us. And then, I mean, the things that can happen down the line, I think are, my brain probably can't process it. I'm just not smart enough to understand all the cool things that will and could happen. But we see it everywhere. I mean, Tesla, like you look at all the, stuff that's AI driven there, and machine learning is AI, right? So it's a subset of that world. So, I think it's one of those things, again, going back to value and utility to society. Like there's tremendous value there, but there's also a lot of risk, and that risk is stemmed, I think, in how do you trust this and how do you know it's going to take us in the right direction, so to say.
Yeah, it's interesting. I've heard some great interviews on podcasts, and like you said, the AI aspect is not new. I mean, that's been around, right? And
Yeah.
but you look at the large language models that have come out with ChatGPT and such. I think you raise a great point of the deep fakes and fake news, as is called, which has frankly been around for a while. I mean, you just look at
Yeah.
you've got Fox on one side and you got MSNBC and CNN on the other side. You're like, well, they're looking at the same movie and they come up with two different stories about the same movie. It's not just perspectives. They're now you've got a story that comes out. It doesn't even show up on one side or the other. It only shows up on one side. And even though it's a real story, right? And you'd say, well, this New York Times, and they never lie. I'm like, well, they're like everybody else. Like they're not, they're the challenge now is like, what do you trust? And it has nothing
Yeah.
to do with AI, right? It has to do with
Right.
everything. Like, what do you trust anywhere? Right? If I go and Google something, say, what is the answer to this? I'll get 10
Yeah.
million answers. Half of them say one thing, half of them say the exact opposite. How do I know which one's true? Right? Now, if
And
I'm an expert, right? If I'm an expert in a topic, like if somebody did a story about me and something that I'm an expert in, they
yeah.
would write the biggest pile of dog crap that you've ever read that only I can see, because I know it's crap because it's about me, right? I know what they're
Yeah.
saying is bullshit. But no one else will see that. They just say, "Oh, it looks true enough." But if I read an article about you or someone else, like, I don't know if it's true.
I
You're
don't
probably like,
know.
it's garbage, but I don't know that, right? And that's the world we live in. So I don't know if AI is going to make it better or worse, because it seems to have, I don't know what people are calling it. I call it the ghost in the machine, where it just makes stuff up. And maybe it's getting its information from people, which makes stuff up. So I don't know.
Yeah, and I think, I mean, I have two comments on that. One specific to AI. I think, the near term effect, especially in the world of content, is I think we'll see an explosion of mediocrity, right? I don't think you'll get excellence out of AI. I think that still will, for now, be something driven by humans, but you'll get an explosion of mediocrity because we live in this world of clicks and, generating, impressions and to sell ads and stuff, right? But I think your point is right, is that it's not a function of AI, it's a function of human nature. And for the longest time, our gatekeepers were just distribution was hard, right? Prior to the printing press, distribution was really hard. Printing press comes around, like we've had, these issues in journalism in the 1700s and the 1800s of false stories and things of that nature. But not everyone could have a mass production facility. And so that limitation of distribution was kind of that natural gatekeeper in our society. And we had enough control at that level to say, hey, that publication is completely, you know, bad or biased or whatever the right term is to use. Now we have no gatekeepers, right? The internet has made it such that distribution is free. And so anything that can be digital, whether it's text, video, audio, images, it can get out there. And with the rise of social and, everyone being connected in a massive global graph, distribution and being able to get something out there, true, false, funny, evil, whatever it might be, is just a click of a button away.
So it's interesting. I was listening to somebody explain this because I love the way I hadn't thought of it from that perspective of, like if you think of like publications or major
Yeah.
media, entities, stem from the fact that they're the ones who had the printing press, right? And they had the ability to print, or 50 years ago, I couldn't go out and print all that stuff unless I had a
Right.
printing press. Whereas now anybody can do that. And I was thinking about like, they've described like there's like, web 1.0, 2.0 and 3.0, where, right now, I guess we're in 2.0, which is basically you've got social media companies, it's decentralized information, or everybody, it's not decentralized information, it's centralized platforms, but anybody can contribute to it. And the next iteration, supposedly web 3, is where the platforms are decentralized. So you're in charge of your own information. Can
Yeah.
can you explain that a little bit? Because I think I'm starting to understand it, but conceptually, I think a lot of people haven't really got there yet. So can you describe like where the trend potentially could go with that?
Yeah, I think, it's this notion of, and we're seeing it a lot in this world of advertising, right, and whatnot too, because of, the Facebooks and whatnot of the world. So, the decentralization is more about the decentralization of ownership of content, right? So, or data per se. So, hey, if I'm posting my pictures to Instagram, right, or if I'm posting, messages to Twitter, or if I'm posting video to TikTok or YouTube or something, those are now owned legally and technically by those platforms. And what Web3 and the, kind of this, decentralized movement is about, hey, we own our own content. So when I put it out on Instagram, it's not that Instagram owns it. I put it out on, in the world of Twitter, it's the mastodons and stuff of the world. I own it. I own how it gets used. I can pull it back. And so, it's still built on the rails of a decentralized network, which is the internet. So distribution doesn't really change per se. It's the ownership end, and it's no longer centralized ownership of content. Rather, each individual or each entity owns its own content. We'll see if that works. Like, I think, you know, humans aren't decentralized species. Like, we are tribal primates, right? And we want groups, and we want, leaders, and we want, formations and things like that. So I don't know that, everyone's going to be running out and being like, hey, I want to own my own, all my, click data and stuff like that. Because you know what, frankly, I like the ads. I get much better ads on Instagram than I get, on things that don't practically, like, I don't know, if advertising is going to be the business model, might as well make it good. So, but like it is the breaking apart of ownership of your data, I think, is like the fundamental unit there. Everything else is, still about connecting and, social graphs and networks and stuff like that. And so we'll see how that kind of evolves.
So here's a question for you, and somebody posed this to me, but since you're talking about advertising and you
Yeah.
probably have I assume you have a good grasp on it. Um, I'll take Facebook for instance.
Yeah.
I was talking to somebody who specializes in ads, and they said, "Look, I said the way things are going, the ad platform is not going to have any value because what they're doing is they've got so much data. Uh, it's not going to take them much to say these are the best ads." So if I put out an ad, let's say there's like, let's say 80-20, right? 80% of the ads are just in the middle and they're whatever. You got 20% that are good. And
Yeah.
then Facebook says, hey, we'll do your ad for you. You don't have to do it. We'll do it for you. And they just take the best practices and then they're shrinking that 20% to zero because they're edging out all of the people. You have a good idea. Oh yeah, your ad's doing great. And then the competition down the street does the same thing. They're like, oh, I want Facebook to do it. And then they take my ad, they move it around. We're like, hey, it's doing great. then there's no alpha in doing ads. Then, I mean, that destroys the ad industry, doesn't it? I mean,
No, I
it's not, we're
mean,
not far from this.
like I think we're already there from like I mean there's plenty of services that optimize and best practice, right? Like it's not just, it doesn't have to be Facebook, like as long as you have data. I mean there are massive companies that people haven't heard of that are, huge warehouses of consumer data. Right, and they can do all that, but I think that's where human the value we add as humans come into play in the sense of creativity and figuring out different ways to approach things. And maximizing on what's working now is like what I would call like more like a local maxima, right, where you can find and optimize in some kind of locality, but you'll never discover the next hill, the next mountain ahead, and the next opportunity. So I think you need that creativity, human creativeness, randomness, factored in to keep finding the next mountain, the next hill. And so, yeah, I mean, obviously, performance marketing is all about optimizing, and but it's also, times change. Like today, it might be automobiles and like used car ads. Tomorrow, might the most important thing might be, I don't know, toilet paper, whatever, terrible example, sneakers or something. So, there are ebbs and flows to what as societies and communities we need, we want, what's going on in the world. And so I think, you can never just rest on your laurels and say, all right, hey, Facebook, just generate my ads for me. You can do that. Like most companies, I think would do that, but like that's what separates, I think, high performers from average.
Yeah, and just for reference, I think toilet paper is always trending, especially around Halloween. So I don't think you're wrong.
I think we finally just got through our COVID stash. So yeah.
Yeah, but I mean, it does raise an interesting point, because if you think about AI, and this part I found fascinating, prior to the chat GPT, coming out to the world,
Yeah.
people thought that technology would basically get rid of the logic brain people first, right? It's like, obviously tech is going to take those jobs, and the creative jobs, I always get these confused. I think it's the right brain, but the creative side of the brain,
Yeah.
that's going to be fine, because that's always very human. But what happened with AI is AI went after that first. They went after the creative stuff, and the logic brain stuff's still there. So
Yeah.
I find that to be fascinating. I mean, granted, it's 80-20. It's not there yet. It's still very mediocre, but it's going in that direction.
Yeah, no, and I completely agree that there's, the ability of computers at scale to try, creativity obviously gives it an edge. A human can only sketch so many things so fast versus a computer can do, essentially infinite stuff in the same amount of time. But those machines are still a function of their input, and those inputs are based on human, bodies of work out there, whether it's existing movies and images that it's from, or existing text and stuff. So, I think that the human brain is still a pretty powerful, impressive thing. And, over time, will we reach that singularity, right, where we can't, tell the difference between AI and humanity? It's not implausible, I think, as we've seen. But how long does that take, and what does that result in, and how does that impact creativity and stuff like that? I mean, that's a real question, but I don't think we're there yet. I think we're still a bit away from that.
Yeah. Okay. So a question for you. I mean, with Stocktwits, you probably get access to a lot of data from what people are seeing, and you get a sense of kind of the emotion in the room.
Yeah.
How are you seeing? I mean, the markets. I was having this conversation just prior with our company. We're talking about the markets as a whole, and like, what is the outlook? And I was scratching my head thinking, like, this is probably the most confused I've ever been. I've been doing this for 23 years in terms of what the market is going to do and why. And so I'm curious in your thoughts. You mentioned before you're kind of bearish, but what are your thoughts on the market, where things are going, like where, directionally, what do things look like in your mind?
Yeah, I mean, I think as I mentioned before, I'm probably on in the minority bucket of being probably a little bit more bearish still. From a community perspective and a Stocktwits perspective, and we actually do track things like sentiment and interest and stuff like that pretty closely. And having 14 years of data gives us a pretty good understanding of that space. And I will say, I think we are Definitely, up from the lows of kind of the bearishness of late 22 and even early 23, right? If you recall, I mean, January was kind of the beginning of this next run, but it was still a pretty bearish time. So I think from a the kind of retail community perspective, there's a bullishness. I think people think that the economy is stabilized. My personal take is, I still have concerns around a number of different parts of like the credit market and cycle. So, we're at record credit card debt, right? And this is U.S. specific. I'm not as well versed on kind of global numbers or whatnot, but in the U.S., right, we're at record credit card debt. Student loan payments are starting up again, right? We've had a 3-year hiatus from that, all right? Student loan payments, car loans are in a precarious position in aggregate. What is the impact of buy now, pay later? I haven't actually seen the data yet there, but that's one of these things that has been used by, I think, the younger generation pretty extensively, and it's so common now in purchasing behavior, right? I mean, most e-commerce sites, Amazon, like all these big things, even in your credit card, it says, hey, break this up and into payments and stuff. So what is the impact of that? So I think we have a lot of these kind of credit markets, obviously, interest rates and mortgages and all the things related to that. Though I think housing has been the strength of the economy in a lot of ways, and so I just I look at that and I'm concerned in that world. And so I think the next 6 months, we'll kind of either see, hopefully I'm wrong. That's the better answer for society if I'm wrong. But I think we have another 6 to 12 months to kind of flush this out and see what happens and what the impact is there. But I'm in the minority, at least amongst most of my peers and the community on Stocktwits. So.
So what do you think, just out of curiosity, I mean, I kind of look at this as, what is the one lever that is going to move the needle, right? I always look at it as like, what's the one thing that's moving the markets? And for the last, whatever, 20 some odd years, it's been interest rates, right? And pretty much the Fed. And you just look at what the Fed's doing and you follow along and you're going to do great.
Yeah.
And that changed pretty much this year. And, I think my thesis has been we're going to have higher rates a lot longer than most people think. And been saying that for over the past year, and people are like, no, it's mid this year, mid 2000, May of 2023, it's going to start to decline. And then it was June and August, and by the end of the year, and it's kind of like, at some point, people are going to wake up to the fact that, hey, we're in a different paradigm. I mean, that's what we've been talking about. Now the question is, are we in a paradigm that looks like the 70s? That's kind of been my thesis, is we end up looking like the 70s, which was epitomized by mass confusion. People didn't know what was going on. They didn't know why it was going on. It didn't make any sense. And all these kind of one-off events happened as well. But it feels a lot like that. And I think that, I mean, you know this, right? Bear markets are they're basically, their whole premise is to cause the most amount of people to lose the most amount of money, right? that's the goal. Doesn't mean it's going down. It's going to cause people to lose money. So I mean, what do you think? I mean, what do you think of the Fed at this point? I mean, I'm always curious in people's opinions on the Fed, because I think it's a new paradigm with the Fed, and I'm always wondering how people are reading the Fed.
I don't consider myself to be like, an economics expert or a macroeconomist. I'm happy to be an armchair economist for sure.
All economists are armchair economists, just for note.
Fair enough. I've been with you where I've been amazed at the number of people that think that rates were going to go down this year, right? At the beginning of the year, everyone's like, oh, I think you probably saw the same stats I did. Like 60% of people think, the rate cuts will start in like over the summer or September, and by December we'll have like 2 or 3 rate cuts. I was like, what world are you living in that you think that is even a remote possibility? Like, it just seems so odd to me. Where I was fully convicted that they're going to raise rates, a few more times this year, and they've essentially signaled that, and I think everyone's come around to that only in the last 2 to 3 weeks. When was the meeting last week where they said, hey, they took the pause, and but they'll raise probably 2 more times this year. So rates are definitely a big driver. I think, like, I don't think it's like holy cow, how dare they, right? I mean, I think being used to a world of like 2, 3% interest rates, like that's not, the era we grew up, like I'm like 6% rates are not crazy, guys. What's crazy is like 20% rates, fine, like that would have been crazy. But I remember my parents' mortgage in the 80s. I feel like it was like 11%, 10%, something like that, right? Like we're still in pretty good credit times, and there's still a lot of cash on the table. We just have to readjust asset values, and so asset values got way out of whack over the last 15 years. And I think we've had a rapid adjustment in some cases, but we still have a long way to go in other cases. And I think again, it goes to interest rates ultimately all about the credit markets, right? And so that's where I go back to what is housing going to look like? What is, right now everyone, is talking about kind of the commercial real estate markets, especially in big cities like New York City. We're seeing the fallout in San Francisco, I think, happen recently with some of the announcements of people just, leaving properties, so to say. To me, like, I think fighting inflation makes sense. I think, they're probably coming from the space of not wanting to become Japan in some ways, right? Of the 90s. But so like I don't particularly think like, oh my God, it's so crazy that they're raising rates and getting it to this place. Whereas, anyone that's in the markets or heavily dependent on asset values, they're like, really annoyed and they hate, the Fed and Jay Powell and you can kind of pretty much see that in commentary. But inflation's still there. It's coming down really fast. Obviously people want to avoid deflation, but we're not there yet. I mean, we're still pretty close to having 4% inflation, right? 4.3 or whatever it was
4.1.
last year.
Yeah, it's
Yeah,
so that was kind of my next question I was going to ask is, up until recently, the issue was, are they going to be able to raise rates high enough, fast enough to deal with the inflation, right? Which they've been behind the curve the whole
yeah,
way. I mean, I think no one's going to argue that. However, the one thing that kind of comes to mind is, yeah, we have 4.1 right now for inflation. I made the prediction a few months ago that we could hit 0% inflation by the end of the year, which would be possible. And if you look at the math, it's possible.
yeah,
Like it's not out of the realm. Like if real estate starts to drop, 45% of CPI is real estate. So
yeah,
it doesn't take much to move the needle there. So the question I have for you is, if inflation keeps dropping, let's say it
yeah,
drops to zero, maybe not zero, but 2 or 1 or something like that.
yeah,
What does the Fed do then? If the economy is just fine at
yeah.
5%, there's nothing wrong, and we got a 5% interest rate, what does the Fed do? Because now they're in a bind.
Yeah, I mean, what they do, I have no idea. Like, I would say, hey, to your point that they're behind, and they were behind, obviously. I think you let it ride. Like, I don't think you react right away. So if we get to the end of the year and we do hit like 1%, 0% inflation, and I think that'll be hard. I mean, I think real estate has just foundation, at least home real estate side, not commercial so much, but the supply demand mismatch is still a big structural issue that will, I think, keep it up. But let it run. Like, okay, don't raise rates. Obviously, I mean they'd be done by then. But I don't think you react and all of a sudden just start dropping rates because hey, we hit 0%. Flush it out. See what happens over 6 months. See what happens over 12 months. That longer higher thing can be a stable period, and being at 5% rates again is not like historically like some crazy wacky number. It's not like we're way out of control on rates, right?
Right.
Um, it's fine. Let's see what happens.
I mean, they do tend to keep, the Fed funds rate and inflation similar within a few percentage points of each other
Yeah,
historically. I just asked because, for years, for decades, the Fed has been concerned that we become Japan and we have deflation, which was a real concern, which in my calculations we had for a number of years. It just wasn't reported that way. But if you look at everything else, we definitely had periods where most asset prices dropped.
yeah,
And then, of course, we had the reverse. So it's just an open question because the Fed fears hyperinflation and they fear deflation. I'm not sure if it's equal, but they certainly fear them both. So it's just it depends on where inflation goes. I mean, if inflation goes
yeah,
low enough, then I think they'd have to drop them.
Sure. I mean, I think if you do see, like, again, I mean, 0% inflation, I guess it's not a scenario I can fathom. And I know you said, like, hey, you can see it, but I just don't think real estate goes that fast, that, far down. But I mean, it's possible. So, yeah, but I think, moving interest rates is a very powerful tool. And I don't know that you would need to, like, jump right away, like, give it 6 months.
Yeah. Okay. Yeah. Just, I think it's it's something
Yeah.
to keep track of.
I'm sure people are going to hate me for that answer, but it is.
Well, I mean, it's an honest answer. I mean, everyone's got a soapbox answer, and I think the reality is that some people just never change their mind. It's just like it's always the same pitch. The people are pitching the end of the world and dollars going to zero while the market, goes up 1,000%, and they're saying short it. It's like, all right, that's probably not a good idea. But yeah. So, all right. Well, as we wrap it up here, Rishi, so any kind of final thoughts or things you want to, wisdom you can leave our listeners with?
And this is something I used, I say to the Stocktwits team as well, and, just, friends and stuff in general. When it comes to the markets, I think small steps, don't, I know a lot of us like to see, the stories about the home runs and the big wins and, hey, I wish I got into Nvidia before it, like, took over the world or whatever. But small steps, like, what I say at Stocktwits is small wins equal big things, right? And it's the power of compounding and all that. But I think you can apply that to your investing life, your business life, your personal life. Focus on making small improvements every day, or every week, right? Like, don't pressure yourself to have to do it every day. But I think if you just focus on the small things and finding the success and joy and wins in small steps, you get to where you eventually want to go, and you're not constantly, like, trying to take that home run swing. And leave it at that.
Okay, great. Rishi, I really appreciate you coming on the show. Where can people find more about you?
You can find me Arcana on Stocktwits. I don't know, and Twitter and LinkedIn are probably my public areas. So come find me and come join the conversation on Stocktwits.
Awesome. All right. Well, thanks again for coming on the show, and we'll definitely be back in the future.
Thanks, Kirk. I appreciate the time.
Hey, Doug, did you hear? We're giving away free money. Well, I'll tell you about it in a minute, but before I do, there's a saying in the mining community, well, precious metals mining, that is. The saying is that if you want the best deals, you have to be in the room. Now, you're probably thinking, what does it mean to be in the room? Well, I'll tell you. Being in the room means that you're on the short list of people who get invited to be a part of the best deals. These are the deals that most investors will never have access to. You mean like IPOs? Nope, IPOs are chump change. Those are for retail investors, small potatoes. That's nothing compared to these deals. These deals would have you salivating to get access to them. Once you know they exist, you will never look at investing the same way again. I almost don't want to even tell you that they exist because it will ruin your thinking of how the investing world really works. Now, you might be excited that these deals exist, but you only have access to the deals if you're an insider, or in the room as they call it. Now, as loyal listeners to the show, I'm going to give you a chance to be in the room. Money Tree Investing Podcast has created the Insiders Club. This is a community of our show's members who are loyal listeners of the show and want to get more out of their investing experience. Being a part of the Insiders Club gives you insider status for upcoming events and webinars, discounts, free stuff and books, and influence on the future direction of the show. This is a great opportunity to join us as we expand our content and services. Oh, and did I mention free money? Yes, in the next few weeks, I'll be giving away free money to our members of the Insiders Club as my appreciation for listening to the show. Now, there's no cost to join the Insiders Club. Just go to moneytreepodcast.com/free money today to join the community. That's www.moneytreepodcast.com/free money. I hope to see you in the room. All right. Well, that was a great interview with Rishi. Really appreciate him coming on the show. And now we're into the panel portion of the show. We have our very own Megan Gorman. Hey, Megan.
Hey, Kirk, how you doing?
Good, good. Glad to have you on the show this week. And we also have our very own Doug Heagren. Hey, Doug.
Good morning, Kirk. Long time no see. Always fun to spend these times with you, throughout the week.
Yeah, I feel like I talk to Doug every day because we do so many podcasts together. So
I feel like I talked to you yesterday. Oh, wait, I did.
you
Yeah.
did. Well, let's just dive right in here. So Megan, what are some of your thoughts? We were talking about before the show about investor sentiment and reality, and and I think there's a big discrepancy there. So, kind of, what are your thoughts about that?
Yeah, I mean, I work with a lot of corporate executives. So, when we're talking about what's going on in the marketplace, my clients who are more on the services side of the economy feel less negative about the market, right? Because they are seeing it in their business. In comparison to my clients who are more on the good side, they sort of have a more negative investor sentiment because of what they're seeing in their business. So I think this idea of the fact that it's not going to be like a typical recession, like everybody feels like they're in it, is probably the most likely case. But rather, we've been going through this rolling recession probably since October of 21. I'm sorry, yeah, October of 21. I'm getting confused with the dates. And so I think it depends on where you are, where you're working, what you have going on in your life, that ends up giving you your mentality on how you think the market is doing overall. I do find that when clients are looking at performance, they are pleasantly surprised. But again, this has been a long rolling recession for people. And so I think everyone's sort of looking for that aha moment where things start to really, truly feel better. And I'm not sure people feel very optimistic going into a presidential election year.
Not this presidential election year, that's for sure. So,
Yeah.
Doug, what about you? What are some of your thoughts on the investor sentiment versus reality?
You know what? Actually, Megan helped me to remember this. I had a conversation last night with one of my clients as a business owner, and I've actually had several business owners that I work with who have actually had a fairly positive take over what the economic climate has been for them, especially COVID into present. One of them was into credit collection business, and I mean his business revenues went up almost 400 to 500%, just because with all of the stimulus that got paid out. And what do people do? They paid down debt, which was great for his business. Now, on the other side of it, this other gentleman is in the medical device business. And this gentleman's also seen his business grow. And I perfectly timed, he was in the vascular device business, which of course you could see a little bit of an uptake there just based on COVID and some of the issues that they had with vascular issues from COVID. But what he said, and I think we've heard this and seen this before. My wife works for a major Fortune 500 company. They are as good as things are. They are still dealing with one of the biggest problems they're facing is the inability to necessarily deliver on orders and demand. Right now, they're getting so much. There's so much pent up demand. We talked about this, Kirk, in other conversations about M2 Capital. How much is there? How much money people have to spend? How much desire people have for goods, or whether it's B2C or B2B, right? They need parts to put their products together, and the finished product. Consumers have demands for products, but the issue that they're still facing, very heavily, is in the supply chain. They still cannot get the parts they need to be able to meet the demand that they have seen massively spike, and that massive demand spike is certainly counter to a recessionary data, right? There is absolute demand there. That is not a recessionary indicator. But at the same time, it's going to continue to be a massive struggle for us to be able to meet the expectations, the demand through the supply, because the supply chain's still broken. So we're also starting to see a lot more of, which is interesting in our conversation we talked about, we're already starting to see it. But I think there's going to be a continual shift here to changing the supply chain from overseas, from China and places over there, to direct mainland delivery, which means potentially a massive continued spike of development, Mexico, Central America, South America, where they can come up through those NAFTA trade routes. But it's going to take time. So are we seeing a recessionary situation? Certainly not on the demand side. We've talked about the financial ability for people to continue to afford and continue that demand if the prices keep going up, which again comes back to a continued issue we are still facing on supply side delivery. And I think that's not going away anytime soon. And if that continues to create a disconnect there and we can't get back to an equilibrium, now you run into things that could continue to become problems and exacerbate what will eventually be a recessionary situation, because people are going to run out of money at some point. That's what Powell's hoping for. It's going to take some time, and it isn't going to be fun getting there.
So, it's interesting. I had a really interesting conversation, another interview this morning with a hedge fund manager. And it was fascinating because every time I speak to somebody, everyone's got so many different perspectives on the market, right? You've got, this one opinion of we're going to recession. It's any time now. You've got another opinion, which is we'll never have a recession, right? It's like we'll never have one ever again, right? And you get all these different perspectives, and every time I talk to somebody, just get a different view on it. And his perspective was, look, we printed $10 trillion in 2 years. He's like, that's basically doubling the money supply. And asset prices like real estate basically doubled in the last few years. He's like, so he's like, it wasn't inflation, it was a currency devaluation. So effectively, your currency is worth half what it was before. So naturally, the assets are going to be double. They're not worth more; they're just worth more in comparison to the currency. And I was like, yeah, that makes a lot of sense. I mean, because effectively that is how it works. And so you look at it that way and say, all right, well, if that's true and everything else is abnormal, right? If you look at the markets and say, well, then now they're abnormal because you've got plenty of money sloshing around out there, maybe valuation should be higher. And you keep coming back to this fantasy land of like, what's expensive? Like, where does it stop? Like, what becomes too expensive where it's like, all right, we have had enough. And the other perspective you brought up, which was interesting, which is like, we're at a 5%, like short-term treasury market. It's like, that's normal. That's like historically normal. And I was like, yeah, that's true. I mean, we've been talking about this in the show for a while, but I was thinking about it as he was talking. I was like, it's historically normal, but then are we in a normal market? Like, have we found a new equilibrium where we are? So are we going to recession, or is this going to be just a muddle through, which some people have been talking about for a while, which I agree with. We're going to muddle through. It's just a question of, the U.S. economy doesn't tend to muddle through. It tends to have big spikes and big valleys that follow it. That tends to be our MO for this economy. So when you get this muddle through, it's just like, it seems abnormal for the U.S. So it kind of feels like we probably should have some more spikes and valleys, but it's always interesting just to kind of rethink your census and be like, all right, this is what I thought was going to happen. Obviously, people thought we were going to recession. We're not. You could argue whether we were in a recession, even though they fudged the data, and where are we going from here? So as Doug, as you said, you talk to business owners, some of them are having a good time. I would argue that debt collection is probably not the end of the spectrum that you want to say, hey, we have a booming economy. Debt collection's doing great.
Hey, but, if people are paying down their debt, that's a good thing. But, so that helped.
It did, yeah. And there was a lot of debt that was paid down. And I think we've looked at some charts that we've talked about in the Friday episodes where actually the amount of debt is going up and the amount of defaults is slightly rising. It's not something to be concerned about at the moment, but it's definitely on the upswing. So, I think looking at all the data, it just kind of brings in like this reality versus sentiment. Like, what is reality versus how is everybody feeling? And so it just kind of makes me wonder. I mean, Megan, you work with a lot of corporate execs and depending on the size of the company, they're seeing their own reality, right? And the reality they're seeing from the corporate side, not the investing side, but the corporate side. I imagine you probably get some good insight. So are you like, how is the sentiment on that side? Like, is it kind of like all over the place? Are there kind of pockets of things that that people see that feel very good about, or like, how are you hearing about things?
Yeah, I think it depends if they're on the good side or the services side. My clients on the good side, things have been slow. If you wanted a couch 2 years ago, you couldn't get one. Now they've got a plethora of couches, right? I think that what is a bigger issue, and I think for investors that they need to think through, is what has sort of corporate executives apprehensive, and I think this is important for portfolio construction, is we have a wall of debt coming towards us with all these empty offices. There's a reason why you're seeing CEOs like Jamie Dimon at JP Morgan and David Solomon at Goldman come forth and say the people need to be back in the office, right? So, because at a certain point in time, we will start to see defaults there. And those defaults ripple through to things like regional banks. Getting a commercial loan right now is not easy. I actually just got off the phone to do this. So I think what I would tell anyone listening to this is, as you're navigating your investor sentiment, what you should do is take a look at your portfolio and see where those vulnerabilities play out. So, a lot of times on the show, Barb talks about REITs, right? Are you doing, this might be a good time to do a deep dive on your REITs that you're holding and seeing where's your exposure in the REIT space. Is it in storage? Is it in hotels? Is it in retail? Or is it in office space? And that may be something you want to sort of pare back. The other thing I would look at is where's your regional bank exposure? A lot of people got like sort of the volatility of the SVB, First Republic Bank debacle that happened earlier this year. So I would be thinking about those exposures. So when you think about what's going on in the C-suites, what they're apprehensive about is, how do you manage people back into the office space? Because I think it's all about the larger social contract, which is every company needs to be taking steps to bring people back in to help slow this sort of upcoming crisis that we're going to have with all these empty office spaces. And this argument that you can turn it into housing is not easy, because the way the plumbing works in corporate buildings and the elevator shafts and how the bathrooms are, it's very hard to turn that into housing. So that likely is not going to be a viable solution across the country. So I don't know if that fully answers your question, but it sort of goes to, when I'm talking to people in the C-suite, the things that they are most concerned about.
No, it's an interesting perspective, and I'm glad you brought it up, Megan, with the office space. And I'm curious in your thoughts, so just as a kind of a follow-up question. So the corporate execs are worried about as you said, the social contract more than anything else, but they're paying for the office space. Like Goldman Sachs and Morgan Stanley and JP Morgan, like they've got office space. It's vacant. I know a lot of people who work in office spaces, no one there because they're all working at home, but they're still paying for it. So, it's not like it may be vacant. It's not really vacant. It's not really utilized.
It's the big companies, right? I think it's the small to mid-sized companies that are walking away, right?
Right.
And that's where I think what has to happen is these larger corporations have to sort of lead the way of, we've got to get back into the office. I don't know if you guys saw this article this weekend. I can't remember if it was in the Journal or the Times, so I apologize. But one company that's done something really interesting in managing their office space is J.M. Smuckers, the place in Ohio. If it's Smuckers, it has to be good. They are doing a program which they think, because the thing about the work from home thing is the whole productivity debate, right? Are we becoming France, as Martha Stewart said? And
Hope not.
I would argue yes. So when Gen Z wonders where their great economy went in 20, 30 years, you can look back to now. But what Smuckers is doing, which I thought was interesting, and I've actually brought up with a couple of my clients in the C-suite, is they are not mandating like 2 or 3 days back in the office every week, because it doesn't sort of have a cohesive strategy. But what they're doing instead is they're having 22 core weeks where basically they're saying, hey, if you work for us, we don't care where you are the other 30 weeks of the year, but the 22 core weeks, you must be on campus. And if you decide you want to go live in Mexico or Florida, you have to pay to get back to Ohio. And what they're finding is it's a better use of people's time, productivity, and office space. And why I bring this up is not because I think everybody should be doing what Smuckers is doing, but I do think that we need to have creative solutions which will help in the investment market. right? Because putting a mid-sized company in Ohio, realizing that 22 weeks of the year, Smucker's is going to have their people on site and it will benefit them, will less likely have them walk away from a lease or a mortgage on a building that they own. And so I really hope that what happens here is that we see creativity kick in, that American ingenuity that allows us to take advantage of this moment, but sort of stop this potential crisis that's coming at us. But as an investor, mitigate your risk on that. The last thing I'll say is it's sort of interesting, in talking to people in the private markets, what I am also hearing in the distress space is that, these buildings, these big office space buildings are being sold for a song, right? And so certain investors and buying groups are coming in and buying them. So I think that'll be interesting that we were at that part in the cycle where some people want to get out of the burning building and some people want to buy the burning building because they think it's going to be a good foundation for something else.
Yeah, that's actually a great insight as well, because we've had a few people on the show that talk about that, and a lot of them have said, yeah, we're not at the bottom yet. Like and actually it's funny you say people are buying, because everybody I've talked to, like, it's a consensus, like 30% vacancies in New York and in LA in office space, and people are like, yeah, a lot of the wind has come out of the sails, but there's still a lot more is what I've been hearing. So it's great that people are coming in and buying, kudos to them if they've got an idea. But, I think if the trends, the way they're going, people are fighting back. I mean, every week I hear like Goldman Sachs, like, get back in the office, like, okay. And then no one comes. It's like, okay, next month we're getting everybody back in the office. Like, sure you are. Like you said that 5 times already.
Those companies because of the HR issues, right?
Right.
I think behind the scenes, I think people want them back in the office.
Of course they do. Yeah, I mean, they definitely want them back in. It's interesting to hear, like, it's like every month they come out like, all right, we're getting everybody back in. Like, didn't you just say that? Like, was it not successful before? Like, what's going on here? But totally. Go ahead, Doug.
Well, Kirk, I was going to say a couple of things. I mean, one of the biggest reasons that they want them back is control. I mean, there's numerous stories out there, especially in IT, where people can literally have multiple computers, up, where they're out there and they're bragging about, hey, I work 4 jobs at the same time. Like, I'm like, no, that, ethical, no, but guess what? That's what corporations have squeezed out ethics for the employees for so long. It's hard to say sorry, that that's a problem. But at the same time, you also just have the reality of, certain jobs just don't function as well at home. Certain jobs function better at home. You also have the reality that some people just don't work well by themselves. The majority of people don't necessarily work well self-managing their own time and productivity. There are people, my wife's fantastic. I mean, they dropped her at 3M and said, you're on your own as a sales rep, living out of an apartment, and had a territory. She thrives in that. You put her in an environment in an office and it squeezed the life out of her because people interrupt her all the time. But I hate to say that's the minority, not the majority. The majority of people out there absolutely struggle to self-manage their time productivity, and they've definitely seen a massive drop in productivity overall that I think companies are tracking this, and it's a problem. The issue is you've shown people freedom. People were fried, they were burnt. You showed them that freedom, you gave them that flexibility, and it's it's a culture shift. And I don't know, you're gonna get some of it back, but it's gonna be really difficult. I just read an article where they said 4 to 5 p.m. is now the dead hour, because basically employees are now taking that time between 4 and 5 p.m. and they're getting shopping done, they're picking up their kids, they're doing all of these things that they never had time before. It reminds me of the retirees I've spoken to, who always say, I don't know how I got anything done before I retired, because I have no time now. It's all filled, right? And I ask that every day, like, how in the world do we get anything done? Because we're constantly moving here and there. I also want to touch base on really quick on the commercial real estate. Listen, real estate people are going to real estate. It is what it is. I've got a client that I talk to that has commercial real estate. It's not his first business, But he said to me recently is, one of the things I want to do, I've got some business ventures in place. And when I take that money, one of the things I want to do is I want to buy more commercial real estate. I looked at him, I said, you mean outside of downtown, right? Because I'm trying, maybe in the suburbs, maybe where people, might be close to their homes, but listen, are you unaware of what's going on? But I do think that there is still either an unawareness completely of what commercial real estate is facing, especially if you own some commercial real estate that's doing well. I also think that it's also a little bit of maybe naivete that comes into the equation that people are still facing with regards to, how they are, how they're going to, see what's going on. And if they know it and they love it, they're going to keep going back to it. And I will say that I probably see that in real estate more than anything else. Just a little side joke. It isn't quite about taxes, but listen, when it comes to the money, and we were talking about business owners owning the businesses and what they're seeing, there's that trickle down effect, right? You got the business owners, you got the top and mid-tier employees, and you got the bottom. And we know this. The bottom, we may say we're not going into recession. The bottom tier is definitely feeling it. You just started to address debt is, there is debt going up again. It reminds me a little bit of George Carlin, just a little bit of humor. I don't know if you've ever heard this one. He goes, the upper class keeps all the money. They pay none of the taxes. The middle class pays all of the taxes, does all the work. The poor are just there to scare the beep out of the middle class. So keep showing up with them jobs.
He's so good.
Yeah, he was the best. One of the best anyway,
Hey, so going back really quick to work from home, I do think there is something that we don't talk about enough that I find concerning, which is security risk. The three of us on this call are regulated by the SEC. But what I am struggling with major companies allowing everybody to work from home, particularly in certain industries, is the threat of hacking, or, I know this sounds, but this happens all the time in corporate America. Somebody holds up a company hostage, right? And they have to pay a ransom. When we all work from home, there are a lot of weaknesses in the security. So I do think that is something that is not talked about enough in terms of making things secure. And in our industry, what I have been surprised about is the incredible lack of guidance from the regulators on that. And you guys know this because you've had offices, but you're technically supposed to have a swipe card at the entrance. There's supposed to be different rules about getting access to an investment firm. And I just feel like we haven't been given a lot of guidance. And if we haven't been given a lot of guidance, that means most industries haven't been given a lot of guidance. And so I feel an impending crisis will come from a security breach in this country.
I think you're completely, I mean, this, if you work out of your house, you're supposed to have a dedicated office door. It's got to be lockable. You got to files lockable. Your family can't be around this stuff. If you send an email, it's got to be a secured email. How many people are working out of their house right now on general internet, sending email over Google about something that, our industry has, and you say the lack of guidance of regulators, there is at least guidance, right? But a lot of these people in other businesses just immediately got told you're going to go work out of the house, and they're using basic residential technology to be able to access incredibly sensitive information. Not everybody, was working in a place where they had a corporate dedicated VPN computer with secure, and plus the fact that they've got, lots of sensitive information that's kind of going here and there or whatnot. I agree with you. I mean, we've all seen, if you go back and look at the history of security breaches, 99% of those security breaches have to do with a vulnerability at the access point, right? Target was they didn't have secure credit card processing. Most of the time, it has been somebody's been able to hack through, the login screen, right, and log in, some sort of breach in terms of passwords and login. Well, if you now take that unsecured communication, unsecured access with passwords and logins, all you've done is broken, because people just have no clue about this. They think email is secure. It's not secure. Anybody can hack and get this stuff. unless it is going through a secured server, which generally is got to be some portal that it's either been encrypted as it's going to and from, or it's going to be a portal you've got to log in, like, digital faxing, right? It's like, oh, I've got a digital fax. No, the best digital fax is you literally have to have like a soft phone on your system that you're logging into and uploading through a remote portal. But a lot of these digital faxes, you email to that fax number and then it'll fax it out. Well, guess what? That email is open to anybody. And while we've been trained and there's been expectations you could argue could be improved and managed and regulated better, at least there's something. Because most of these people are just thrust at home where they have nothing secure. They have no clue about the vulnerability of regular email or other communications. And I agree with you. It's going to come. And when it does, it's going to be something really major and it's going to hurt. It's going to be, the Target story. If it happens again, it'll be Target or bigger.
Yeah, it's such a good topic. I'm glad you guys are bringing it up. I mean, I know, my wife works from home. She's got a designated computer for her work. Like, everything is done on that computer. And it's the same computer she would bring to the office. It's a laptop. She'd use the laptop in the office. She'd bring it home. And I think, as the blockchain technology becomes a little bit more prevalent in all of our technology, I think that's going to solve a lot of problems. But it's this. I always kind of hearken this back to the police car, right? When you're driving, when I was a kid, they had radar guns. You're like, well, how am I gonna keep from getting a ticket? Well, I'm gonna get a radar detector, right? And then, all right, you get a radar detector, and so then the police get a radar detector, and they made those illegal to have a radar detector. And then it's just back and forth. You're just constantly gonna have back and forth. And then it was like, how do I evade it? Like, I can get a license plate because now they got laser and it will refract it away. And it's just all these things, and it's just constantly this back and forth battle, which is great for the economy because people just make more stuff, right? And people are always innovating, but at the end of the day, Joe and Susie Lunchbox are not security experts, and they're never going to be security experts. So there's always going to be this challenge, and even in corporate America, there was always the problem, right? You click on a phishing email, and in our industry, I know Megan, you talked about the regulators. Like, I mean, the problem with the regulators is they get handed down this law or rule they're supposed to implement, and then they got to figure out how to do it. Like, they've already implemented some new stuff, and like, all right, can you give us some guidance? No, we have no idea how to implement it yet, because they got handed this thing. You're supposed to do this, and now they've got to figure it out. I mean, it's such a challenge in this, as our economy speeds up, as our technology speeds up. It's just, you have to speed up the implementation, or else by the time you implement it, it's going to be gone, right? I mean, it took the regulators 15 years to implement some rules on social media. It's just like, how do you do all this? Like, it's constantly this back and forth of, like, as we speed up, it's like it's too late to regulate it because it's gone. So, but I do want to touch on one thing, because we talked about it before the show, and I want to touch on it before we wrap it up here. Is we've been talking about real estate, unfortunately, for most of this episode, but I saw something recently where homeowners just started dropping their insurance because and they're not paying their homeowners fees. And it just kind of brings in this kind of shadow problem that everything's fine on the surface. There's no recession. Everything's fine. Real estate's not going anywhere. Higher interest rates. There's this, we talk about this in the show all the time, but start to see this where people are not paying their insurance, their homeowners fees. Like, what do you make of this, Megan? Because this gets back to like the investor reality versus sentiment of what people are thinking.
Well, I was sitting here in California. I see this more as a climate issue, right? So here, not only are we losing insurance carriers, but premiums are going up exponentially, and there's a lot of exclusions. So I think for a lot of people, they may not be able to afford the coverage they could afford in the past, because it has gotten so expensive. So we're seeing across the board insurers trying to mitigate risk. They're not insuring certain things. I've had clients lose insurance. Even providers like State Farm have left California. And then on the claim front, we're seeing insurance companies being far more aggressive in refusing to pay certain claims. So I see this as a bit of a climate crisis gone awry. But if you think about it, right, and I know this will air later, but today there's a hurricane about to hit Florida. We had a hurricane last week here in California, along with an earthquake. We have fires in Washington state, and obviously there's the fire in Maui. You know, these types of weather conditions are very hard for companies to insure against. So I think, you know, from that perspective, I think it's just gotten very hard to pay, coupled with the fact, and then I want to hear Doug's point of view on this, when that building crashed in Miami, and it turned out, like, remember when and everybody sort of got buried alive, it turned out the HOA for years had been trying to do things like levying, you know, surcharges in order to maintain the building. I think because of that, a lot of HOAs around the country are now trying to bulk up reserves to do projects that will help preserve the building. But I have heard from my clients saying, you know, I've been assessed $100,000 HOA assessment, special assessment, because we've got to go do this in Florida, right? And so it's just gotten crazy expensive across the board, regardless of your wealth band, because of the climate crisis that's going on right now. So, you know, that's just my point of view. I'd love to hear Doug's.
Go ahead, Doug.
Well, first thing I'm going to tell you is Megan just got this podcast canceled. Talk about climate change.
Sorry. Look, I'm not for ESG. So just so we're clear here, like,
we're
I'm
clear.
not an ESG fan.
Nobody's listening anymore, Megan. They all tuned tuned off anyway. You're good. Too late. This is the problem with putting disclaimers at the end. Nobody stays to listen. No.
I hear you.
You know what? I did see that there was I saw something recently again showing how many. This was going back and forth because basically there's, you know, a lot of people in real estate in Florida along the coast, and there's a tremendous number of homes. If you want property along the coastline of Florida now, there's actually almost like 2008, 2009 level for sale type homes down there. Not at the pricing it used to be, but the number of homes, because the people that own them are out trying to sell them because they've had their insurance spiked so badly they can't afford it. And
they can't afford to self-insure.
They can't afford to self-insure. Nope. I mean, very few people can, especially especially when you've got that kind of property assessment. But I have a client from South Carolina who, in the process of unfortunately losing a job, was right after the hurricane hit and destroyed Sanibel in Fort Myers. And they have a property in Sanibel. Their home was one of basically every home in their neighborhood that got destroyed. It's been an issue. Climate issues. It is coming from storms, whatever the cause, right? But that's definitely driving up those prices. In fact, I've got an adjuster here right now from a claim that I've got last May, right in my neighborhood, almost concentrated like a derecho. We had a massive storm come through with baseball to softball size hail, wrecked all the homes around here. I saw someone at that time on Nextdoor indicate they had been with their home insurer for 15 years and had never filed a claim. They filed this claim and got dropped. I mean, talk about BS. And this is something this is why so many people have an issue with these insurers, right? I could paid forever and I finally need you. And you say, here, we're going to pay it. We're gone. It is becoming an issue. So they're trying to, it's like long-term care insurance in a way. Mm-hmm. It's something where they're constantly trying to assess how much of claims they're going to be paying out years into advance and collecting enough today to do it. And they're constantly behind the eight ball. They can't figure out how to price it because there's becoming more and more of these major disasters they're costing these, you know, you can say for profit or mutual, doesn't matter. They're trying to actually make more than they spend. And it's becoming an issue for them to be able to do it from a cost perspective. And that's going to hurt the consumer, especially when you're coming back to self-insurance. You know, now you also add in the issue going back to the HOAs. I used to be on an HOA of a 1,600 home HOA in Colorado. Okay. Now, we didn't have we really didn't have a lot.
God bless you. I'm on a 16 unit one and they make me crazy. 1,600.
1,600. Now, thank God. Well, thank goodness these are standalone homes. So I don't know if yours is 16 units with shared common walls.
No, yeah,
Okay.
it's a building in San Francisco.
Okay, that's a nightmare, right? So totally different, because when you're an HOA on shared common walls, common space, so many more problems to deal with, because everybody's got responsibility for that. At least with ours, standalone homes, basically what we did, you had to make sure we plowed the sidewalks, and we had a couple parks that we had to maintain. But even with our low maintenance, right? Because the county did the streets and all that, and homeowners responsible for their own properties. We did a reserve study just, to look at what we would need in order to be able to afford regular maintenance and repair, 15 years out, 20 years out. And like I said, all we had is a small park, and we got 1,600 homes paying monthly. I can't remember what it was, $30 a month, to pay into this. So we're collecting a pretty good amount of money with not a lot of expenditure. The reserve study showed just to get the park repaired we had to almost double our HOAs to have enough money by the time we would have to take care of this park. And we didn't even have a pool. We didn't even have like half of what these parks have in terms of facilities. So when HOAs are trying to battle that, now you take, like you've got, Megan, common access. You've got to deal. The roof is paid for by everybody. The walls are paid. Everybody's sharing the internal, walls and issues and utilities and things like that. Now you start throwing on damage that was not even foreseen from godly events, or, I canceled the other half now on religion, Kirk. But, don't worry. We got religion. What else we can talk about here? We'll cancel everybody by the end. Heroin. We'll talk about that. Got to throw that in now and then. This is a long running joke from past podcasts, but basically when you start adding that in, and all of a sudden you get destruction. This isn't even wear and tear that comes along. Yeah, I mean, these HOAs already have enough on their plate, and most of them are woefully undercapitalized for regular reserve study maintenance. I don't know if these communities we're seeing are jacking their HOA prices, or it was just what they had. But I think it's not only is it going to be an issue of these people bought more than they, bit off more than they could chew in terms of buying real estate, thinking, oh, I'm paying $1,500 rent. I can go get this mortgage for $1,500. It'll be the same.
Well, the realtors at fault, right? Because nobody wants to buy a house with a high HOA. So
Absolutely.
the HOAs just say, okay, we won't change our HOA fee. We'll just charge a special assessment.
Oh, absolutely. That one does really well when they come through. Yeah, that goes over fantastically well. But, but I also think it starts, again, we'll go back to the same issue. These, they sell these homes, they sell it based on, look what you can afford. Pay for yourself, buy this property, and you're not giving rent away to a landlord. Listen, you're paying for a place to sleep no matter what. You go buy a mortgage, you say, oh, it's only $1,500 a month. I was paying rent for $1,800. Look, I'm saving money. Look, there's a lot of other costs in home ownership, people. And people are finally figuring that out, along with the inflation and utilities and everything else, that, okay, yeah, maybe the rent was $1,800 a month, but now all in on my house, I'm at $25. And now I got student loans kicking back in. I got these HOA dues that I wasn't thinking about. People are notoriously crummy at budgeting. Like, they just look at they go, oh, it's $1,500 a month. No, all in on a house, jack it up another 25% minimum in terms of overall cost of maintenance. And then at the end of the day, guess what you end up with? You end up with people who are sitting there, as I said on the other one, listen to that sound. That's the sound of the vacuum of money being sucked out of budgets and sucked out of the system. And all of a sudden, something's got to give. The last thing they're not going to pay. This is why I always find it hysterical. Banks don't lend against your home. People think that they're lending against my property. No, they lend against your income, secured by the house. Okay, that's why they got to ask for all that paperwork and income. I don't understand. I've never understood why banks are so overly concerned about giving a loan on a mortgage, because at the end of the day, what's the last thing people are not going to pay? Their mortgage, right? They're gonna pay to keep that house over, their roof over them. But guess what? Guess what's going to happen? Other things are going to give. People are going to drop their insurance silently. People are going to get behind on their HOA. People are going to not pay their credit card. Deal with it. Come after me. But people are not going to, unless it comes down to absolutely the last thing they can do. People are not going to stop paying for housing. Right? It's so at the end of the day, this is the sign. It's, this is the little sign that's happening. It's happening, little fringe things. It's like Carlin said, the poor, they got to keep working, and they're just there to scare everybody because they're sitting there going, oh my God, I have this much per month, and now my bills are this much plus. Something's going to give. And that's where the cracks start to seep.
Yeah, no, totally agree. Well, I go back to the Ayn Rand quote when they asked her, what do you think about the poor? She's like, don't be one. Like it's just, yeah, it's so true. So let's wrap it up here. So Megan, final thoughts from you.
Just, I think about what keeps you up at night and the potential unintended risks that are coming down the way. And you should do a scan of the REITs in your portfolio. Think through what you have for regional stocks. Think about these issues before they happen. I'm Megan Gorman. You can find me on Instagram at All the President's Money. Kirk, thanks for having me on.
Thanks for coming on, Megan. And Doug, final thoughts from you.
Listen, there's one quick and easy way to not be poor, and that's not overpay for college. We talk about unease, we talk about fear, we talk about concern financially. Listen, it's on everybody's mind. College is incredibly expensive. Housing and college are two of the most expensive things people are going to face. And in most financial planning, they're the least discussed. So you can at least get, there's one of them that you can definitely get help on. Go get some free resources, procollegeplanners.com. I'm one of the founders. If you have any questions, you want to have an extraordinary future for your child and actually save money over what's posted out there on education, get the information, go to our website. If you have any questions, let us know.
Great. Well, thank you both for coming on the show. Always enjoy your insights. That's the show for this week. Thank you again for joining us on Money Tree Investing Podcast. My name's Kirk Chisholm, Wealth Manager of Innovative Advisor Group. We don't just manage your wealth, we make your life better. You can find more about me at innovativewealth.com. And of course, you can find me every week here on this show. You can also check out our show at Money Tree Investing Podcast. On our website, you'll have access to the show notes, resources, and the archive shows. Please remember to subscribe on our YouTube channel for immediate access to the new shows when they're released. When you subscribe to the show, it allows us to get access to some of the top minds of investing in personal finance. While you're here, please leave a comment and question if you want us to address it on the show. Have a great week ahead, and remember, no one will care about your money like you do, so invest in your life.